This is the Converge Podcast, brought to you by the Converge Institute. Each week, brilliant minds specializing in AI, blockchain, and fintech come together to challenge the status quo and empower disruption. Sponsored by our founding council, CUNA, BankSocial, the Texas Blockchain Council, and the Universal AI University.
Welcome, everybody, to the Converge Podcast. We are so excited today to have our advisor at BankSocial, Greg Gallant. And Greg and I actually know each other from way back, and we'll get into that story in a minute. But Greg, welcome to the show.
Thank you, Becky. I'm glad to be here. I really appreciate the invite.
All right. So Greg was just talking a little bit about my pink headphones. So yes, I have pink headphones, and yes, I have blue hair. And so we have to make this fun, and it's gray and dull and dingy here in Dallas. But Greg, you are in another part of the country. You are not in Dallas. Where are you at today?
I'm actually in Tulsa, Oklahoma. I've lived here for about 14 years, originally from Dallas. Well, not originally, but moved here from Dallas. Well,
we have a saying in Texas that you may not have been born here, but you got here quick as we could, right?
Yeah.
And so you.
I know that my oldest daughter still lives there. I don't think she's ever leaving. So.
Oh no, I mean, why? Why would you? Well, I know why you left, but yeah. All right. So let's talk a little bit, Greg, about our history. We've known each other. I really think it's been 2 decades almost now, which is kind of crazy. But talk a little bit about how we met and just a little bit about the journey we went through. And then I want to talk to you about what you're doing at WeStreet, because you're doing some really cool, innovative things there that I want to dig into. So what about our history, Greg? What's our origin story?
Well, I met you at Texans Credit Union. I came to Texans Credit Union in Dallas. I think it was probably about 2004. Moved there from Connecticut. So I'm originally from Columbus, Ohio. My 40-plus year career in credit unions took me a lot of places. Dallas was one of those. You and there was another individual that were managing kind of our director of branch operations, I believe.
Nikki was her name.
Yeah, that's right. And I was the COO at the time. So we were going through a lot. We had just done a core conversion. We changed our home banking system. We had a pretty robust ATM network. We were growing our branches. And then all of a sudden, commercial lending came into the picture and things got a little difficult at the credit union. And so you bailed. I think you bailed.
I sure did.
You bailed. And so I always have kind of stayed in touch with you through your journey, and we've always shared a lot of interesting stories. And I do think it's probably been close to 20 years. So it's been a long time.
Yeah, I think I started at Texans in 2007, Greg.
Okay.
Yeah.
Yeah.
So,
it's funny in this industry, I don't think you ever lose touch with anybody. You just kind of run into everybody throughout your career. And, what's scary is I've been doing this for so long now. People that I started with are beginning to retire. And that's the R word is just not, I can't imagine myself being there, but some of my peers that I started with are going through that process.
Well, I think that is a little bit of a challenge in the credit union space for many different reasons. But one of the reasons that I see that getting close to retirement, and a lot of the leaders and CEOs of credit unions today are there. And we've been talking about, this massive wave of retirement. I seriously think decades, because at the end of the day, those things don't really change, right? Leaders come and they retire and whatever. But one of the things that I hear on the fintech side of the house, so now working with credit unions, I'm a service provider to credit unions. I'm providing software for credit unions. I'm not actually running a credit union anymore. And one of the things that we hear on this side of the table is CEOs who tell us they don't want to rock the boat. right? They're sliding into retirement, and it's like, I got 2 years. I mean, they're literally counting the days. We have a phone call with them and they say, I have 125 days until I retire, and I am not doing anything that might mess with that. And so therefore, they kind of stop being innovative. They stop doing forward-thinking things because they just want to sit still. And because the CEO wants to sit still, kind of by default, the credit union sits still. So now that you're kind of getting close to that R word, which I think both you and I would say that we're not really ever going to stop working, right? We're going to continue to do something regardless if we get paid for it or not, right? But as you're looking at your journey cycling to a close at WeStreet, how do you continue to stay innovative? How do you not fall into that mindset that I'm just going to coast into retirement?
My entire career has been about pushing the limits and doing things that are not, probably wouldn't be defined as typical credit union stuff. And you know, I've got 43 years in this industry of doing that, and I just don't think you can shut that off. I look at the next few years as still, I walk around my office with 15 different things in my head all the time, and so just to shut that off, I don't really think I can do that. Somebody had told me that they thought there was a shelf life for a CEO, and they kind of said that they think that shelf life is 10 to 15 years. And I asked them about that. I kind of prodded them about that. And I said, I'm not sure I really agree with that. What do you really mean? And so their premise was that, at the end of that shelf life period, it's time to step aside and let a younger leadership come in because you're out of ideas. And I'm like, well, I don't think you're ever really out of ideas until you stop looking for them. And, when you get to the point that, like you described, where you're not willing to look for new ideas, you're not willing to continue to innovate at your credit union, I think that's a sad state of affairs. I think people also, they get safe. They feel like, well, I'm not going to do anything, and so I'm not going to rock the boat, so I don't potentially lose my job. And, I think the other side of the equation is even worse. If I don't do anything as the CEO to continue to set this credit union up for success in the future, then what am I doing here, right? So,
one of the things that I learned at Lone Star, where I was the CEO for the longest, because I've been a CEO twice, as you know. And one of the things that struck me, and it actually was one of those moments where I was like, oh my gosh, this is kind of freaking me out, was when I was in a meeting and we were kind of doing a postmortem, not in a negative way, but we were rehashing with a vendor an implementation that we had just completed. And we were talking through things that went well, things that didn't go well, what we learned, that kind of thing. And the vendor that we used, the service provider that we used, was talking about their experience. And the things that they said about working with Lone Star could have been said specifically about working with Becky Reed. And at that moment, I recognized that the organization had taken on attributes of me as their leader. And, the scary part of that is none of us only have good attributes, right? We also have some not so good attributes. And it just kind of hit me like a ton of bricks at that moment that this is really what leadership is all about, because the entire organization is moving forward based on kind of my personality. And that is a heavy burden to bear. That's a lot to put on your shoulders, because you're like, holy cow, I'm not perfect. I don't do the best things always. And so what negative attributes has the credit union taken on because of me? But that lesson taught me that you can't ever rest on your laurels, because then the organization will.
I think you're 100% right. And I think if you have a strong culture and strong leadership, it's inevitable that that organization begins to embody who you are. And that's good and bad, right? Just for exactly the same reasons you're suggesting, that there's good things and there's bad things. I think the biggest challenge for a board, though, is when that CEO transitions out of that organization and that CEO and the credit union has been successful in particular, the board immediately can fall into the trap as, well, we got to look for somebody who has exactly the same characteristics, embodies the same traits as Becky or as Greg. And the reality is that's a wrong thing to be doing, because when we came to those credit unions, each of our individual credit union, it just happened to be lightning in the bottle that we got there with our skill set that credit union actually needed at that time. And then you move forward for me, 14 years of being here. And, I can safely say that this credit union, thank God, doesn't need the same skill sets that I brought 14 years ago. It needs something else for the next 10. And I think the biggest challenge that we're running into is the board's ability to look forward and pull the trigger on what is their most important decision they will ever make as a board, and that's to hire the CEO. So I think that the bad thing is about that whole characteristic of the CEO and the credit union kind of personality melding into one is that, maybe that's not what you need to move forward. And if you're a progressive thinking CEO and you're constantly pushing the organization to innovate and learn and continue to develop, and you really have a learning organization, then that stagnant type of situation you run into won't happen, right? What's interesting is I speak at all of our new hire orientation meetings. So once a month, we have a new hire orientation meeting, and it doesn't matter if there's 2 people in there, or 14 or 20. But one of the messages I leave them all the time is our responsibility is, yes, to develop your technical skills to do a better job here at the credit union. But the more important thing is for us to develop the soft skills of you as an employee, not only for the benefit of WeStreet, but for your next job, because the probability of you being here long term today is maybe 4 years. So, and I want to make sure that they're ready for that next opportunity, whether it's here at our credit union or the next credit union. And that's how I think you continue to develop a innovative, progressive organization. Doesn't have to be a credit union. It could be any organization.
Well, I make the analogy sometimes that people think that they need to replace their computer because their computer got slow, right? Well, the reality is that there's really nothing wrong with the hardware on your computer. It worked exactly the same way as it did when you bought it 5 years or 10 years ago or whatever it is. The issue is that the operating system on that device is asking for more resources. And I think that organizations, as they grow and change, they're going to be asking for more. If you're doing a good job of creating innovation and you have a thriving, organically growing organization, it's going to change. Its needs are going to change. And sometimes leaders don't change with it. And sometimes, to your point, 10 years ago, we hired you because your skill set was exactly what we needed. But now, because of you, we've brought the organization to a different place that requires a different skill set. And so sometimes when leaders move or go somewhere else or get put in different positions or whatever, it's not because, they've gotten slow, right? They're still the same as they always were. It's the needs of the organization have changed. And sometimes people are able to grow and adapt with that. And other times it's best for them to go take that skill set and benefit another organization that needs it. So yes, I think we all know that things change, but I think we underestimate a lot of times how much.
what you're just saying really resonates with me. I think we have to hire fearless people that are direct reports, people that are, and not only hire the fearless people that are willing to, continue to develop and push the organization, but they have to have the freedom to do that. And you see a lot of frustrated people who maybe are big thinkers, but their CEO is tamping that down and not allowing those things to occur. The other thing I wanted to mention, though, is, when we talk about innovation and development, generally that seems to always take a bent towards systems, computers, core system, online, mobile banking, whatever. And I've seen a lot of credit unions, and I've talked to a lot of CEOs that have went through a core change or online change or accounting change, and they've went to something that was technically more up to date and should have translated into more innovation. The problem is they're working on the wrong side of the organization. The innovation has to be within your culture, because if you are just going out and acquiring new technology, up-to-date technology, however you want to describe it, but you don't have the people in the organization to make it happen, to have the vision, this is what we're capable of doing, then I don't care how innovative your systems are, right? So I think as leaders, we sometimes fall into the trap is, well, I bought it, or we bought it, we installed it, now we're innovative. Well, I think that's a fallacy, and I think you have to be innovative with your culture. You have to provide innovative benefits to keep your employees with the organization. And if you think innovation is only limited to your operational infrastructure, let's say, then I think you're missing 80% of the innovation equation, because you got to have the people that are forward thinking, and they got to feel free, and that's your leadership as a CEO, to execute on that vision. So I think we get lost in that sometimes, or some of us do.
Well, to your point, I think that technology is a tool, but at the end of the day, people use the tool. And, we hear this hype all the time. AI is going to replace people. We heard it about robots, right? Robots were going to replace people, but new jobs and new things are created that people need to do, that those things kind of replaced. Things just keep growing and moving forward. But at the end of the day, it is the people. And you mentioned innovative people and doing innovative things that don't necessarily have to do with spending a bunch of money on a new core system, for example. And one of the things you do at your credit union is pay people by the day. Tell me about this.
Well, I'll tell you where that came out of. I had been to a meeting, and one of the speakers was about financial security for all, essentially. And one of the issues that came up was typically people that have financial insecurity issues, it tends to be 3 days before their next pay period, right? And as a country, we tend to pay people every 2 weeks, which is interesting because that's a phenomena that really didn't happen, I believe, until right around World War II. And it was done for cash flow reasons. So we used to pay people every day, right? In cash, right? So that really struck the chord with me, because I wondered how many of our employees could actually fit that definition, where, by the 3 days out from pay period from their paycheck, they don't have money for groceries, or they can't put money in the car, or gas in the car, or something had occurred that now, the washing machine broke or whatever. So we found a company that we outsourced a part of our payroll to where they manage the ability for an employee to take their pay every day within 12 hours or 24 hours after they've earned it. So they work on Monday, and they can take that pay on Tuesday, right? Because they've earned it, right? It's not like you got to wait till 2 weeks to collect that money. So we rolled that out in the organization probably about, I think it was 2 years ago. And I have been very, it's mixed feelings. I was going to say I've been very impressed or very happy with our employees that are taking advantage of that. But it also bothers me that they have to take advantage of that, right? But, and that's what I'm talking about. I mean, I try to bring that innovative spirit to every part of our organization, not just our operations. And yeah, that's another thing that we fall into, a trap sometimes, is we do everything for the member, which I have no problem with, as long as we're doing just as much for our employees. We sometimes miss that because we get so focused on the member, and we think it's all about the member, which is a huge part of who we are, is about the member. But man, without the people, you can't service the members. So you got to feed both sides of the equation. And sometimes we don't do a good job with that.
Agreed. One of the things we did at Lone Star was a good employee experience translates to a good member experience, right?
Exactly.
And so if we focus on the employee experience first, it is going to trickle down and out to the members. But to your point, we spend a lot of time and we focus a lot of our time on the user experience, meaning the member.
Correct.
And not the user experience as the employees. And I can tell you how frustrating it is as an employee when the stuff you use every day to do your job doesn't work, or it doesn't work well, and that is a painful. I mean, we had members that would tell us that when they won the lottery, they were going to buy us a new computer system because it was taking 45 seconds for a receipt to print. And as you think about someone on the front line, they've got 10 people staring at them and they're standing there twiddling their thumbs for 45 seconds. It's not a good experience for anyone.
I think we, like every organization, when you're expecting your employees to accomplish great things and they're up to the challenge and they're ready, but you don't give them the technology or the tools to do it, but yet you still expect them to hit those objectives. Well, that's a really unfair equation, right? And you cannot ask people to exceed expectations or hit lofty goals if you're not willing to give them the tools to do it. And I see that often too. I mean, when you're a credit union is setting on a high net worth ratio, and look, I think that's absolutely important to have a strong net worth ratio. But at some point you start to ask yourself, okay, why am I not spending this money on the operation? Right. And I don't know where that's at. And I'm sure there's all types of opinions on that. But what I can say is when it's too much, then it's at the detriment of your members and it's at the detriment of your employees. So when you see somebody or a credit union or any organization that isn't reinvesting in its operation, that's a organization that will be out of business, in my opinion.
Well, and that's an example of running your credit union to please a regulator, right? And that, that's a dangerous proposition for the future of the credit union. I mean, you can have 14% capital and you can have 10-year-old equipment and you're probably not going to be doing great.
Well, and those organizations are also the same ones that you got to have a certain CAMEL rating in your bonus plan as a CEO.
Exactly. Oh,
and they want a CAMEL 1. And a CAMEL 1 just tells me you're running your credit union way too conservatively.
Not doing what's best for the members, probably.
I would say that there's a high probability you are not doing what's best for the members.
Yeah. And we could get into a whole thing on bonus structure for CEOs because I have seen that kind of bonus structure and sent wrong behaviors that end up putting a credit union out of business. And that just makes me crazy, so much so that I would not I didn't accept a bonus program at the credit union, I wouldn't do it. There's other ways that you can incent me. And one of those was I had the board hire me an executive coach. So I chose to do that instead of getting a bonus. But let's talk a little bit. We've spent some time talking about what you should do internally to remain innovative. We've talked a lot about people and leadership. Now let's talk a little bit about responding to the needs of your community. And you saw a need in your community when the state of Oklahoma made medical cannabis legal. And what happened and what did you do in response to that at your credit union?
A little bit of background. The way the state of Oklahoma implemented medical cannabis has been held out as a model for how to release, but by the cannabis industry, by the way, held out as a model by the cannabis industry in order to roll out a cannabis program. So, for example, a license for a dispensary is only $2,500. The license for a grow operation was only $2,500. The license for a testing facility was only $2,500. So we have more medical cannabis cards per capita than anywhere else in the country. And we have more dispensaries per capita than anywhere else in the country.
Even though it's not recreationally available.
Correct.
Still requires a prescription. That's interesting.
Yeah. So the requirements to get a card is a doctor has to sign off on it. And some states have taken the approach, you can get a card for this, but you can't get a card for that, right? Well, that's not exactly what Oklahoma's done. So the industry's been thriving a lot. So much so that you're in a supply and demand issue right now to where the supply of cannabis is off the chart, but it's outstripping the demand. So it's driving the price down, right? So what was going on is that it was very often a dispensary would have a lot of cash because they can't use credit. They can't use debit cards, credit or debit cards. So everything's a cash base for the most part. And so they're collecting all this cash and they weren't being banked at all because of the regulatory environment. And so it was common for the owner or somebody within the company and the dispensary to basically leave the dispensary with a gym bag full of cash, or they leave all their cash inside the dispensary. And of course, every single bad actor out there knows about it, right?
Yeah.
So you're starting to create some significantly scary potential problems, getting robbed, break-ins, etc. And we really saw that. We see our role here as trying to make our communities better. The communities that we have our branches in, we really put front and center. What are we really doing and how are we doing it to make those communities better, where, financial literacy or safety or whatever. And so there was only one other institution here in Tulsa that was actually doing anything for that part of our community. And we decided to take on the challenge. And we spent about 2 years of looking for the right tools, talking to NCUA about what we were doing. And so we launched, I think it's probably been over 2.5 years ago. And so today we take in deposits for those companies, whether they're a grow operation, whether they're a dispensary. And we also have found that we're also doing like a tier 2 or in tier 3 type provider, where a tier 2, I believe, and people out there, please don't, I'm going from memory, so this is not rehearsed. So I think a tier 2 is a company that basically makes all of their revenue off of cannabis. So it could be like an accounting firm or an attorney or whatever. So those have restrictions on them too, on how to manage that. So, we have a very robust OFAC process. We have a BSA process. We split the responsibility between our commercial lending team because a lot of the qualifications are very similar to what you would go through if you were generating or originating a commercial loan. And then within our enterprise risk department, that's where all the software, that's where everything is going on to monitor what is going on with those accounts. The interesting thing is in Oklahoma, they have software that's required that's basically tracks from seed to sale, where that plant is grown, what the seed, where it was bought, where the plant was shipped to what dispensary, and then the sale of that product, whether it's in the form of flour, or whether it's in the form of gummies or some type of edible or whatever. And so that way it's supposed to be keeping the bad actors out of it. So we've been doing that for a while. We're definitely not the first credit union to be doing that. Colorado has had a lot of success there. So we've looked at it from the standpoint as a service to our membership, and not really looking at it from a net margin standpoint or profitability. It breaks even, but that's good enough, right? I think that's good enough for what we're doing.
Well, that kind of goes back to a financial cooperative, right? At the end of the day, I mean, we're not motivated by profit. Certainly, we have to at least break even, right, in order to move forward. And a profit goes to capital, which helps strengthen the entire organization. But because we are a financial cooperative, profit is not necessarily the number one thing we're thinking about when we implement a product or service to our members.
Yeah, I 100%. You're 100% spot on. But I also think the other thing that we can't lose sight of is, we're always going to make our money from lending. I mean, that's where the profit is at, right? And so depending on how that's going, then you can use that not only to add to your net worth, but also subsidize services that, that aren't making money. Not everything we do is going to make money, right? And this is one of them that we have that breaks even. It covers its costs. And so it's a service that I think that our community sees value in. I think from my standpoint, that's what we're supposed to be doing as a credit union. And we could have taken the road and said, look, the requirements to do this business is just so significant that we aren't going to do it. But that would be that, and that's innovation, right? I mean, it's the innovation part is finding a way to make it happen. And that's what our focus was when we started really looking at this, is how can we you can always find the answer. You can always find the reason of not to do something. You have to dig a little harder to make it happen.
You do. And you have to think outside the box, and you have to talk to multiple people, and you need to be looking at all things. And one of the things that I've always admired about you, Greg, is that you take that devil's advocate approach a lot of times. You look at both sides of the equation and try to learn as much as you can to argue both sides of that equation. Were you on a debate team in college?
No, I would say, well, certainly my high school years were not anything we're going to talk about on this podcast. So, but I think one of the things that motivates me is I think we have to look for ways to continue to be relevant, because we are such a small piece of the financial services industry. And we could, and primarily what we provide is a commodity, right? And the challenge is how do you differentiate yourself? And, for a long time, it always annoyed me when I heard, well, we give great member service. Well, blah, blah, blah. Everybody does that, right? I mean, that's the price of poker to set at the table. If you can't give great service, then you're probably not in business. So to me, it's how do we enhance the experience of and redefine what a credit union actually is, and more or less kind of go back to a little bit of the roots. I think one of the frustrating things for me is when we define ourselves in terms of what a 1920 credit union looked like, right? Or 1930. I think that is a problem. You have to be looking at the current world in your industry. And when I say industry, it's financial services industry to me. You have to really be looking at that too, to make sure you're going to remain relevant. And if you're not constantly evolving, if you're not constantly changing, then eventually you won't be relevant. And I guarantee you that the best employees are the ones that want to be with an organization that is constantly evolving, constantly reinventing itself. Just, they don't want to be stagnant. And we have far too many of those examples across multiple industries where you got satisfied and rested on your laurels, and then all of a sudden you're out of business.
Well, I mean, history is littered with examples of those, right? Kodak.
Yeah. I mean, Kodak, Borders. I mean, even GE. I mean, some of the titans of industry have not evolved in a way that is ensured success. I mean, compact computers, even IBM. I mean, there are all types of organizations that were asleep at the switch, or were not paying attention, or they didn't take it seriously what was going on, right? They were too comfortable.
Yeah.
And I would say that, a lot of times we are too comfortable.
I completely agree. We talk about it quite a bit, that credit union is kind of your grandma's old-fashioned word, and our industry, if people really knew what a credit union is about, John says it all the time. John's like, if you go out on the street and you ask young people, really anybody, they don't have to be young, do you want to own your own bank? And they're like, well, yeah, why wouldn't I do that? It's like, well, did you know you can do that with a credit union? They're like, no, I didn't even know that was a thing. And so we do have to do a better job from an industry perspective telling that story, which is why I wrote the book Credit Unions and DeFi, which is why I think that this whole world of decentralized finance, which is why I left my CEO job and came over here to work with John, team, and BankSocial, which is why you're helping us with that initiative, because there is definitely an opportunity for us to, I don't want to say reinvent ourselves, but what you just said, go back to our roots. Let's go back to what we originally did, because that resonates with today's consumer. All right.
Yeah.
So we're going to wrap this up, and I am just going to ask for some final thoughts from you as we close. And Mr. Greg Gallant, if you could talk to your 25-year-old self, what piece of advice would you give 25-year-old Greg?
I would say, don't let imposter syndrome consume you. Many times we have great ideas or have interesting thoughts, if you will. And because we are full of self-doubt, we don't act on those, or we don't promote them, or we don't try them. And so therefore it doesn't happen. And, for me, I wonder, what would have been or could have been had I been more secure in my headspace, right? About what we need to do and where we need to go. And I've been very fortunate to have mentors in my life that have helped me make decisions, the right decision ultimately. So I would say it has to be, you got to be open to the opportunity. And if you're not present, then that opportunity will never happen.
You're absolutely right. And there's a little bit of self-fulfilling prophecy in that, right? Because when you start telling yourself in your head, it's that whole, Stuart Smalley, right? I'm good enough. Look in the mirror and do those affirmations. You probably don't know this, but it was in the interview that I had with Texans Credit Union that the people who were interviewing me so this was probably late 2006 when I was being interviewed by Texans. And I was asked, where do I want to be in 5 years? And that's not an uncommon question to ask in an interview. However, I decided to be bold and actually tell them what I really wanted to do in 5 years, which was be a credit union CEO. Now, the fear there is they're going to go, oh, well, she wants to be a CEO. Why am I going to hire her as a director of branch operations? Right? Or they could have laughed at me and said, she'll never be a CEO. Ha, ha, ha. She's obviously too full of herself. Whatever. It could have gone a lot of different ways. Of course, that I ended up being hired. But because I said it out loud, it was the first time ever I had said it other than in my own head. I hadn't even told my friends. I hadn't even told my husband. I hadn't told anybody that that's what I wanted to, because I frankly thought people would laugh at me. And that was the first time I said it out loud to a group of strangers, people I did not know. I got the job, and guess what? Within 5 years, I was a credit union CEO, Greg.
I know.
All right. Well, thank you so much, Greg, for being here. And this is another episode of the Converge podcast. Thank you so much for listening.